Well, we all feared this. It's been talked about the last 2 years. The recession is coming. The recession is coming. And the party isn't stopping now. I mean, this has been widely called the most forecasted recession ever in US history. We're all just waiting for it. And it seems like it's closer than ever, according to this Business Insider article. Let's break down what it means for the economy, the real estate market, and most importantly, you. Now, the latest CPI inflation report has caused bond yields to rise, stocks to fall, and has raised concerns and raised the odds of a coming recession. Now, economist Ian Lingen warns that if inflation stays at these current levels, the Fed is going to have to do something drastic to induce a recession to get us to that 2% inflation target. Which means holding rates higher for longer, which means that's going to put pressure on businesses, which means they're going to start laying off employees, which means people will spend less in the economy on goods and services, which will naturally bring down inflation, and so on and so on. But the thing is, most industries right now are absolutely dying for rate cuts. Real estate specifically, which makes up 60% of the CPI in the US. And it's not much different between Canada, the UK, and Australia. Real estate plays a big part of economic activity. I mean, just think about it logically for 1 second of what real estate does to an economy. Builders have something to build. Once the house is done, they sell it. There's real estate agents involved. There's lawyers involved. There's mortgage brokers involved. All the contractors it took to build that house. The staging companies. The companies where people buy furniture from, like Amazon and Wayfair, and lampshades from Winners or whatever store people are going to buy stuff, HomeSense. Real estate has an enormous grasp on the economy where a lot of people get paid, a lot of people have something to do with a house being built essentially, and all that money trickles through up and down the economy. Now, the big problem with the housing supply and the housing market in general is that nobody's doing anything right now in real estate. Builders are not building at all with these historic high interest rates. It doesn't really make sense for them. Nobody's buying the houses really anyway right now because everybody's waiting for rate cuts. So builders are kind of between a rock and a hard place going, I don't want to build now. Interest rates are so high. Nobody's buying my houses anyway, even if I do put a shovel in the ground or if the house is done. You know, we have pretty low amount of buyers right now. So I'm just going to wait. I'm just going to wait 6 months, a year. When these rates start coming down, then I'm going to start selling my lots, putting a shovel in the ground and getting things going. So this is artificially lowering a lot of supply. And also sellers that have existing houses are kind of thinking like a builder as well. Like, why would I sell now with interest rates as high as they are? The market's come down a bit. You know, it's going to take forever to sell my house anyway. And then where am I going to go? Even if I do sell my house at a price that's reasonable, I got to go buy another house with a 7%, 6% interest rate. That's crazy. It doesn't make any sense when they are locked in at 2%, 3%. So it all boils down to this. Dude, a recession is coming. The economic recession is coming. There's no doubt about it. They can put all the fuddy numbers they want in the US about how the economy is doing just great. GDP is doing just great. If you dig deep into those job reports, which we always do on this channel, and I'm sure it's not the first time you've heard this, most of the jobs that are being created in America and Canada especially are government jobs. They're public sector jobs, dude. The private sector is hurting so bad. Nobody's creating jobs right now. And all the jobs that are being created in the private sector are mostly part-time jobs. Now, the government's looking at this data, touting it, you know, doing their political theater spin of, oh, look at all these jobs. Dude, it's people getting second jobs. People are working full-time and then getting a job at Walmart or some part-time job just to add a little bit more income to their salary to pay for expensive food and rent and mortgages. The economy is not good. People are struggling like crazy, and it's going to break soon. Eventually, what's happening right now in real-time data is going to affect the CPI. We always talk about how the CPI data, most of it is lagged about 6 to 12 months. So what's happening today is not going to show up in the CPI for another 6 to 12 months on average, specifically the housing market stats, specifically the rent stats. In America, the rents are dropping like crazy. And in the CPI report, it's showing that renting shelter is up. It's doing amazing. It's going up and up over. What are you talking about? It's because they're looking at lagged data. It's just the way the formulation works with the CPI. It's insane. But it's so easy to just get real-time data from companies like Zillow, like Redfin, like Remax, and Coldwell Banker. You can get live data from calling them, and make no mistake, people who are working at the Fed are calling these companies and saying, what are you guys seeing on the ground? They know, they're not stupid, okay? They act like they're stupid. It looks like they're stupid. They're not stupid. They know exactly what's going on in the real-time data. But it's just the way they package and formulate their data that it's lagged. It's 6 to 12 months ago data. And it's making it look like the economy is really doing better than it is. But eventually, shit's going to crack. When the rental decline starts hitting the CPI, I don't know, maybe July, August, September, you're going to see inflation roll over like a rock because real estate makes up 60% of CPI. So gasoline, prices on women's apparel, men's apparel, insurance, like all the things that are listed, they don't mean dick. Like those can go up. Gas can go up. Oil can go up. It fluctuates. That's how the oil markets work. It doesn't matter. Once that real estate data starts to hit, it's going to change things a shit ton. And then the CPI will start going down. It'll make more sense. But by then, September, October, November, who knows? There's going to be all of this pain until then of people having to work second jobs, scrimping their pennies, not buying as much food as they would, not going out and spending as much at stores, which we can see in all the real-time data or the earning reports for stocks. Like a lot of the stores, Costco, Walmart, you know, they're showing their earnings are, hey, consumers are spending less. That's real-time data. But the Fed doesn't look at real-time data. They look at past lag data. You can see it. You can see what's coming to the CPI, which is why a lot of economists are predicting, like, I know CPI is going up and down. You know, it went up for the past 3 months. That, you know, it's not looking good. Most sophisticated economists are saying, like, the second half of the year is really when inflation is going to start dipping down, especially into 2025. And again, right after the election, you know, that's how they do it. The Fed tries to be as independent as possible, not look like they're favoring any candidates. I mean, if they start cutting rates like crazy right now, slashing rates, the economy is going to get a boost. People are going to feel better about the economy. They're going to go spend more. It's going to prop things up. But that can look a little too favoring Joe Biden, so that by the time November rolls around, Joe Biden can say, hey, look, the economy is amazing. I fixed it, you know. Or vice versa. If the Fed raises rates and crashes the economy, then Donald Trump can come in and say, see, this guy ruined the economy. Vote for me. The Fed tries to be as independent as possible, but dude, eventually they're going to have to diverge from that narrative of, like, you know, trying to play the middleman. Eventually they're going to have to cut, and talks are being cut of September. I mean, September is literally right before November. It's going to look good for Joe Biden, you know, to start cutting in September. But anyway, I'm going to leave that alone. That's just a whole nother theory. But the reality is, what should you be doing when it comes to your wealth, your business, your real estate investing? This is a real estate investing specific channel. It's almost go time. I always talk about this. We're at the bottom of the real estate market. Once those rate cuts start happening, it's going to be bananas. The millennials, the Gen X's, even maybe the Gen Zers are going to start running to the real estate market. Everybody's just waiting for it to drop. And when it drops, it's going to be mayhem. All the builders, same thing. They're going to start putting shovels in the ground, selling off their lots, selling off their model homes, which will bring more supply onto the market. It's just logic. It's what's going to happen. Now, Matt, there's going to be job losses. How can people afford houses if we're going to get job losses like you're saying? Yes, there's going to be a lot of job losses coming up. The economic recession hasn't started yet. It's coming. But as I always say, who's most likely going to lose their jobs? And most importantly, not be able to find another. That's a very important point. It's going to be the lower class and the lower middle class. Those people are going to get smacked the hardest. They're a plumber's laborer. They work at a hair salon sweeping the floor. You know, not a real high value job. They're going to get canned so the business can survive and make money. And they're not going to need to rehire. But if you're sweeping hair at a hair salon as an apprentice helper, what qualifications do you have to find another job? You're good at sweeping floors? Okay. John can do that, the third-year apprentice that we have to keep on the business. He can sweep up for now and kind of do twice the work until we get out of this recession. Like, that's what I'm saying. Those people are going to lose their job and not really be able to find another job. But the lower class people and the lower middle class people, they weren't buying homes anyway, as I always say. They weren't ever in the home buying market. They are our renters. So they're not going to skew the data all that much anyway. A middle class person who has a high school diploma, at least, most likely has a college degree of some sort, they have some skills. They probably work middle management, you know, middle layer of some job, some office job. If they happen to lose their job, which is kind of unlikely, that would have to be a very severe recession to kind of go that high up the chain. But even if they do lose their job, they can most likely find another job with their qualifications, with their skill level. They'll find something else in a reasonable amount of time. They can still stay in the home buying market. They can still keep their house and keep their mortgage going. The lower people cannot, but they weren't home buyers anyway. Anyway, guys, that's the video. That's my thoughts. What do you think? I'll see you in the next video.